To your point is we've had this great bull market, the second strongest bull market in history, and during that path we've had 17 pullbacks of at least 5%. And I will tell you, every single one of those pullbacks came with something bad news. And if you look at this recent pullback, the average pullback during these corrections has been about 9%. I don't know that this is necessarily over yet, but our work suggests that the downside from here will probably be limited in about the 4 to 5% range. More directly to your question as far as concerns, I think the big concerns is earnings right now, but I think people are extrapolating some weaker guidance that we're going back into 2008. If you look at next year and you even chop off earnings from 10% to 5% earnings growth, you're still trading at a multiple around 15.5, which I still think is pretty reasonable in this market environment. So I think in some ways, investors right now have overdone it as far as the negativity towards earnings.
Mona, as we were getting headlines and fluctuations in the markets in recent weeks, a lot of people were saying, oh, well, let's wait until earnings, and then we'll see how things really are. Now we've got earnings. There's some concerns about costs cropping up. We see continuing volatility. What should we be paying attention to?
Yeah, clearly this year, we're actually getting a decent set of earnings results right now. 2019 seems to be, as Keith said, where the concern is. So 2018, we're looking at about 20% S&P earnings growth. That actually seems like we'll reach that number, if not a little bit to the upside. The 2019 expectations are for 10% growth. Now, when you have this combination of uncertainties, trade, rates rising, even the dollar this year has been stronger. Now, markets know that at some point this will impact earnings going forward. There is a lag effect, but it's difficult to quantify exactly what percentage we're going to see a drop. So that's why we're getting this uncertainty right now. That 10% earnings number could be, to Keith's point, 5% or lower. And when you get a little bit of multiple compression on top of that, 2019 is not shaping up to be a strong year. But that being said, great earnings numbers this year, even if we get a 5% number next year, pretty good. And some of those uncertainties, rates, for example, even the China trade uncertainty, if we get any alleviation on those two fronts, we could see a nice bounce back.
Have you changed your numbers at all for 19? On S&P?
We're looking at downside to the 10% number. The trade will probably be 2 to 3 percentage points of a hit, so maybe closer to 7%. And then as we see the rates picture unfold and impact from the dollar, we're probably looking closer to 5 to 7.
And Keith?
Well, I agree. It's probably a 7-8% range, probably something closer to nominal GDP at this point. But I would say, think about a month ago, everyone was so ecstatic about GDP, business optimism, earnings, and all of a sudden we're resetting that lower. So I think the good news during this process, which I still think needs more time, is we're resetting expectations. And when you get expectations low, I like to say a little bit of good news can go a long way.